Good morning, students. Welcome you all once again on Ind AS 34 Interim Financial Reporting. So, students, in the first lecture, we have already understood what is Ind AS 1, presentation of financial statement. So, Ind AS 1 talks about the presentation of financial statement. It talks about the component of financial statement. Which financial statement? The financial statement which are required to be prepared on an annual basis, right? We have read that the frequency of the reporting of financial statements should be at least annually, right? So why in Ind AS 1 the presentation of financial statement is given? I mean to say the content of balance sheet, the content of P&L, cash flow is not given because for cash flow they have referred to Ind AS 7, right? Then your content of statement of changes in equity, content of notes to accounts. So these things are given in Ind AS 1, right? So Ind AS 1 is applicable for the general purpose financial statement. And why Ind AS 1 is important? So that the companies, right, which are reporting or which are preparing their financial statement on a regular basis, so those company needs to maintain a consistency in reporting their financial statement. Financial statement should be comparable for a company from one period to another, or a financial statement of a company is comparable with the another company, right? So this is the reason these Ind AS talks about, right? Why these Ind AS are there? So that everyone will prepare their financial statement on the same page, right? Applying a same fundamentals, applying the same principles, right? So that comparability can be maintained, consistency can be maintained, right? Likewise, what we have read in Ind AS 1 for annual financial statement, now we are talking about presentation of interim financial statement. And what is interim financial statement? So today in Ind AS 34, we will be talking about interim financial reporting, right? What is a financial reporting? Financial reporting means reporting of financial statements, means reporting of financial numbers, right? So today we are talking about interim financial reporting. There is a separate standard which talks about some interim financial statements. And what is that interim financial statement means? Interim means less than 1 year. Okay. If you are preparing for a full year financial statement, then Ind AS 34 will not be applicable. Then which is applicable? Then Ind AS 1 will be applicable, right? Is that clear? Is that clear, friend? So once again, a very good morning, Nidhi, Viraj, Sriram, Radhika, Rohan. Good morning to all of you. Okay, guys. Sir, have we read this standard in any time of our journey of CA? Have we read this kind of standard? Please remember, in accounting standard, have you read such kind of standard? In IGAP, we have already covered AS 25, accounting standard 25 is there in IGAP. Sir, if we have opted for GFRS paper, in IFRS, what is the standard? We know that in IFRS, it is IAS 34, International Accounting Standard 34, right? Is that clear? In IGAP, we have already read AS 25. In IFRS, it is IAS 34. I hope it is clear to all of you. Yeah. Okay. Is that clear? Sriram is asking, sir, why Saturday morning class has been cancelled? Sriram, because due to some emergency, so I need to cancel that class, right? My apologies. Yes. Now, why the concept of Ind AS 34 is there? Why the concept of interim financial reporting is there? So interim financial reporting means financial reporting for less than 1 year, right? Financial reporting for less than 1 year. Now tell me which companies are doing interim financial reporting? Tell me, which companies are doing interim financial reporting? If I talk about private limited companies, these companies are not preparing their financial statement on a quarterly basis or on a half yearly basis. These companies are not preparing their financial statement for less than 1 year basis. So which is the company which is preparing their financial statement on less than 1 year basis? Of course, they are preparing for a full year, but still they are preparing for less than a year also, like quarterly, half yearly, 9 months. Which are those company? Guys, tell me. Have you seen private limited companies are preparing quarterly financial statement? Answer is no. Their MIS purpose, even the companies may prepare monthly, but they are only concerned about their profitability, right? Their balance sheet numbers, but they are not preparing financial statement per se. Even if some companies are preparing for a good control purposes, still they are not getting public, right? No one will be able to know the numbers of monthly closing numbers, right? Yes, Viraj and Rakesha is saying listed companies, very good. Listed companies, due to the SEBI regulations, they are required to report on half yearly basis or quarterly basis, right? For example, if it is a debt listed company, earlier it was required to report on a half yearly basis, right? If it is equity listed companies, it is required to report on a quarterly basis as per SEBI regulations. Is that clear? So listed companies are reporting on quarterly or half yearly basis. Now let's assume if a listed company like Infosys, TCS, if I talk about Infosys or TCS, Infosys Limited, TCS Limited, you know, these companies are presenting their interim financial statement on their website on a quarterly basis. So the companies which are preparing their financial statement on a quarterly basis, right? There must be some rule based guidance. There must be some governing standard so that the results, the financial statement of the companies which are preparing their financial statement on a quarterly basis for less than 1 year basis, these should be comparable, right? Otherwise, for example, if this guidance would not have been there, A Limited, which is presenting their interim financial statement, they will apply X formula, B will apply Y formula. Formula, I mean to say, A will do the reporting in its own manner, B will do the reporting in its own manner, right? I'm not talking about the balance sheet format or P&L format, because the format is given under Ind AS 1, the content is given under Ind AS 1, that content is related to the full set of financial statement. Is that clear? Is that clear to all of you? So why this standard is there? This standard is there more from the perspective of the listed companies, because it is the listed companies in India which are required to prepare and present their interim results. They have to do the interim financial reporting on a quarterly or half yearly basis, right? As per the SEBI LODR, SEBI Listing Obligation and Disclosure Requirement Rules 2015, right? So these companies, equity listed companies, are required to report on a quarterly basis as per SEBI LODR, Listing Obligation and Disclosure Rules 2015, right? Is that clear? Sriram, it's not about mostly manufacturing entities. They may be preparing on for their own consumption for MIS purposes, but I am talking more from the outsider world, right? MIS, you can prepare whatever you want to prepare in any manner, right? So MIS is not the general purpose financial statement. Whatever we are talking in Indian accounting standard, we are talking about general purpose financial statement. What is meant by general purpose financial statement? Which is relevant for the stakeholder or user of the financial statement at large, right? Which may be aware by the general public. Okay, so we are talking about those financial statements. Like for private limited companies, what is a general purpose financial statement? Annual financial statement is a general financial purpose financial statement. For listed companies, what are the general purpose financial statement? Interim financial results, interim financial reporting, as well as the annual financial statement are the general purpose financial statement. Is that clear? Is that clear, Shriram? Okay, friend. Now let's come back to the Excel file again. And I will be teaching you this entire Ind AS 34 with this Excel file. Okay. Now, what is meant by interim period? Interim period means period for less than 1 year, say quarterly, half yearly, 9 months, etc. Okay. For example, this is a 12-month. This is a 12-month cycle. This is a 12-month period. And in this 12-month period, this is Q1, Q2, Q3, Q4. Okay. Or a company which is preparing the results for the first quarter, it is for 3 months, right? A company which is preparing the results for second quarter, it is for the second quarter and year to date. Year to date means current quarter and 6 months. Okay. The company which is presenting the results for the third quarter, it is for the third quarter and year to date. What is meant by year to date? What is meant by YTD? YTD means year to date. Year to date means 1st April to current date. Okay. So it is for 9 months and the current quarter. And the company, as per SEBI LODR, are also required to publish the Q4 results for the quarter results and the yearly results, right? Okay. So this is known as the interim period, means a period which is for less than 1 year. Now, one question: whether Ind AS 34 is applicable on results to be published as per the SEBI requirement. Whether Ind AS 34 is applicable. So, friends, for listed companies, SEBI LODR, listed companies in SEBI listing obligation and disclosure requirement rules 2015, they have given a specific format of interim financial results. I am using the word results. Okay. And these are required to be published as per the format given in the SEBI LODR rules. Okay. And let's say SEBI LODR rule says that for the first quarter, the company has to prepare the P&L. The company has to publish the P&L. Okay. P&L for some periods and some specific notes to accounts. In the second quarter, the company has to publish the P&L, cash flow, balance sheet, and some sort of notes to accounts. They are not talking about statement of changes in equity. In the third quarter, the company has to prepare the results. Results, I mean to say the P&L and specific notes. In the fourth quarter, the company has to publish P&L results, cash flow, balance sheet, and some specific notes to accounts, right? This is what which is given in your SEBI LODR 2015. Is that clear? Is that clear? So I am talking about only for a listed company which is required to publish their results. I believe all of you are aware about those results which are required to be published to the stock exchanges, which are required to be filed with the SEBI, Security Exchange Board of India, right? And for the first 3 quarters, these results are supposed to be filed within 45 days from the end of the quarter. For example, for the June quarter, the company are filing their results by 15th of August, 14th of August. Okay, it is 45 days, 14th August. For September quarter, it is 14 November. For December quarter, it is 14 February. But for March quarter, the time period is 60 days, right? For March quarter, it is up to 31st May, right? So friends, in SEBI regulation, they have given a specific format for the results, right? It is not a complete financial statement. It is not a complete things. So they have given the format for the disclosure of results, right? Now the question arises, whether on those results, whether this Ind AS 34 is applicable. Answer is no. On those results, SEBI regulation is applicable, but these results have been prepared. These results have been prepared as per. These results have been prepared as per what? These results have been prepared as per Ind AS 34. As per the Ind AS 34. So basically, these results have been prepared from the interim financial statement, right? From the interim financial statement. And how these interim financial statement will be prepared? The interim financial statement will be prepared as per Ind AS 34, right? In Ind AS 34, some sort of rules are given according to which these interim financial statement needs to be prepared. So let me show you a SEBI result, right? Please let me know if the SEBI results are visible. Let me know. Just a minute. Let me open those results. And are you able to see this result? So I have just opened the results of Interglobe Aviation Limited, Indigo Airlines results, right? Indigo Airline results. December, you can see that statement of unaudited consolidated financial results. So these results could be audited, could be unaudited, right? But of course, these have been filed with the public. Okay. Statement of unaudited financial results for the quarter and 9 months. I told you na, for the quarter means Q3. Q3 means 1st October to 31st December, and year to date. Year to date means 9 months, 1st April to 31st December, right? You can see that they have just filed the results, income, expenses, right? For some periods. Okay. So this is as per the SEBI regulations. And we are reading Ind AS. Ind AS are notified under Companies Act. Okay? So they have given this entire P&L, and they have also given the paid up equity share capital. They have given the reserves. Okay. So they have given this paid up equity share capital and reserves as well. Okay. And they have given some specific notes. No balance sheet, no statement of changes in equity, no cash flow, because it is third quarter. In first quarter and third quarter, balance sheet and cash flow are not required as per SEBI regulation. And they have written also that we have prepared these financial statement as per SEBI regulations. Okay. But now the question arises, right? In these results, balance sheet is not there. Then how this reserves has come from? So from where this reserve has come? From where this equity share capital as on date has come? So friends, for preparation of these results, in the background, they have prepared interim financial statement. They have prepared the financial statement for year to date, for quarter ended and 9 months ended 31st December 2022, right? So on these financial results, Ind AS 34 is not applicable. But from where these results have been prepared, I mean to say, for interim financial statement, this Ind AS 34 is applicable, right? I hope you guys are clear on that. I hope it is clear to all of you. Friend, whether Ind AS 34 is applicable on results to be published as per SEBI requirement, these results have been prepared as per SEBI LODR requirement, and Ind AS 34 is not applicable to these results. But Ind AS 34 is applicable to interim financial statements, and these results have been prepared or extracted from these financial statements, right? From these financial statements. Is that clear? For example, if SEBI will ask that you need to file your net worth, and you need to file your total of current assets, total of current liabilities, your solvency ratios, your profitability ratios on a quarterly basis, let's say, right? Now preparing, or now the filing the statement for all these numbers, of course that is as per the SEBI requirement. But for calculating net worth, for calculating total of current asset, current liability, solvency ratio, profitability ratio, we need to prepare some financial statement. We need to prepare balance sheet, P&L, cash flow, etc., etc., etc. So while preparing interim financial statement, what is applicable? Ind AS 34 is applicable. Is that clear? But the ratios, the numbers which we are filing, the number which we are filing, in that case, Ind AS 34 is not applicable. That is as per the SEBI regulations. Right? Sriram is asking, sir, why 31st December 21 date figures are given in the statement? Sriram, it is requirement of SEBI that you need to provide comparative also, right? You need to provide comparative also, so that user will be able to understand what was the performance for the same period in the last year and what is the current year performance, right? Is that clear? Whether Ind AS 34 talks about on which entities Ind AS 34 is applicable? Answer is no. Ind AS 34 does not talks about on which entities Ind AS 34 is applicable. For example, private limited companies are not applying Ind AS 34. Why? Because they are not preparing financial statement for less than 1 year. I'm not talking about MIS. I'm not talking about the management accounts. Okay. So friends, Ind AS 34 does not talks about that who needs to prepare interim financial statement. Ind AS 34 says that if you are required to prepare interim financial statement due to any law, like for listed companies, what is the law? For listed companies, SEBI regulation is the law, right? So if any company is required to prepare interim financial statement due to any regulations, due to any law, in that case, these listed companies has to prepare interim financial statement as per Ind AS 34. So Ind AS 34 says that मैं नहीं बताऊंगा कि मैं किस पे अप्लाई होऊंगा, कौन सी एंटिटी पे मैं अप्लाई होऊंगा, लेकिन अगर कोई एंटिटी आकर कहे कि मुझे इंटरिम फाइनेंशियल स्टेटमेंट बनाने हैं, then I will tell you how to prepare. So then I will be applicable. Is that clear? So Ind AS 34 does not mandate to prepare interim financial statement. Rather, if a company is required under any law, say SEBI LODR, to prepare the interim financial statement, or the company has decided to prepare interim financial statement, then Ind AS 34 tells about how to prepare and present IFS, interim financial statement, right? How to prepare and present interim financial statement. Is that clear? Very good. Sir, you have told that Ind AS 34 is applicable for a period less than 1 year, right? So interim financial reporting. Interim financial reporting is a reporting for less than 1 year. You have told that interim period is for less than 1 year. So if a company was formed during the year, let's say a company was formed on 1st October 2021, incorporated on 1st October 2021, and they are preparing their first financial statement for the period ending 31st March 22. It's only 6 months. Whether this period is called interim period and will Ind AS 34 be applicable? Tell me. So on 1st October, the company has been incorporated on 1st October 21, and they are preparing their first financial statement from 1st October 21 to 31st March 22. And this is only 6 months. Whether Ind AS 34 is applicable to this company, I mean to say whether this period will be called as interim period, answer is no. Why? Because the company has not chosen to report the financial statement for 6 months. Rather, the company has to prepare the financial statement for 6 months. Why? Because the company has been incorporated during the year. If someone will say that please prepare full year financial statement, it cannot prepare. It cannot prepare, right? Why? Because it was not there. The company comes into existence only on 1st October 2021. Is that clear? But if a company would be into existence from 1st April 21 to 31st March 22, but the company has chosen to prepare the financial statement from 1st October to 31st March, in that case, it will be considered as interim financial period. Is that clear? Interim period. Or, sir, if this company is preparing the financial statement from 1st October to 31st December, then of course, the company has chosen to report for a smaller period, right? So in that case, 1st October to 31st December, 1st January to 31st March, this period can be considered as an interim period. But as far as this is concerned, 1st October to 31st March, this is not an interim period, right? This is a full period. So Ind AS 1 will be applicable. Ind AS 34 will not be applicable. Yeah, is that clear? Sriram, I hope I have already replied to your query. Sriram is asking, sir, if the company is incorporated on 1st October 21, then shall it prepare interim financial statement for quarter ended 31st December 21? Yes, Sriram, if the company is a listed company. And then prepare year-end financial statement for the period ended 31st March 22. Yes, Sriram. This is not considered as an interim period because the company has not taken the period of less than 1 year. Rather, the company has to prepare the first financial statement, which is less than a year, due to incorporation during the year. Hence, these financial will not be treated as interim financial statement. The company was liquidated on 30th September 2021. They have prepared their first financial statement for 6 months ending September 30, 2021. So they have prepared their financial statement, their last financial statement from 1st April 21 to 30th September 21. They have prepared their last financial statement for 6 months ending on 30th September 2021. In this case, whether Ind AS 34 will be applicable? I mean to say whether this period is called as interim period. Friends, tell me quickly whether this period will be considered as interim period. Answer is no. This period will not be considered as interim period. Why? Because the company has not chosen to report the numbers. The company has not chosen to report the numbers. The company has not chosen to report the numbers from 1st April to 30th September 21. Rather, the company is required to prepare the financial statement for this period, right? The company is required to prepare the financial statement for this period. Okay. So this is my 1st April to 31st, 30th September, sorry, 1st April 21 to 30th September 21. Okay. This is not considered as interim period and Ind AS 34 will not be applicable. What is meant by we understood interim period? What is meant by financial reporting? Reporting of financial information in a structured manner, following some rules and principles, right? For example, financial statement. So what is meant by financial reporting? So probably you will say that, sir, I will only present 5 numbers. This is financial reporting. Rahul will say that, sir, I will only present this 10 items. This is financial reporting. Namrata will say that, sir, I will present this only 2 statement. This is the financial reporting. Sriram will say that, sir, I'll present this 5 statement and this is the financial reporting. So friends, no. In this case, comparability will not be there, and hence financial reporting means reporting of financial information in a structured manner. What is a structured manner in India? Balance sheet, profit and loss, statement of changes in equity, statement of cash flows, and notes to accounts and other explanatory information. Right? And if a company has made some error in the past, or the company changing the accounting policy retrospectively, in that case, the company has to give third balance sheet as well. Right? So financial reporting means reporting of financial information in a structured manner, following some rules and principles, for example, financial statements. Right? So now you guys have cleared about what is interim period, what is financial reporting, and what is interim financial reporting. Is that clear? So I have spent a good time in making you guys understand that where Ind AS 34 is applicable, why Ind AS 34 is there, what is interim period, what is interim financial reporting, and I have shown you the interim financial results of Indigo Airlines, which is required as per the SEBI regulations. Right? Is that clear? Very good. Now let's come to the other part, hardcore from the standard. Objective. What is the purpose of Ind AS 34? Ind AS 34 prescribes the minimum contents of interim financial reporting. It says that what should be the minimum content of interim financial reporting. If a company will come out with the interim financial reporting, what should be the minimum content? Principle for recognition and measurement in interim financial reporting. Since these financial statement, interim financial statement, are for less than a year, right? So what could be the principle for recognition and measurement? For example, income taxes. So income tax will always for the full year, right? You are filing your return of income for full year, not for the interim period. So if a company is preparing the P&L account, statement of P&L, the company is preparing the quarterly or half yearly financial statement, right? In this case, how the company, in this case, if the company is preparing the interim financial accounts, interim financial reporting, how this income tax calculation will be done, right? So this standard talks about the principle for recognition and measurement in interim financial reporting, right? So we'll talk about this. So this standard talks about the minimum content, like in days one was talking about the content of the financial statement. This standard is also talking about what should be the minimum content of interim financial reporting. And this standard talks about principle for recognition and measurement in interim financial results, interim financial reporting. Okay, is that clear? Scope. This standard does not mandate which entity will prepare interim financial reporting. As I have told you, this standard does not talks about when the then this standard does not talks about that Ind AS 34 will be applicable to which entity. This standard says that when the entity decided or required to prepare the interim financial report as per its own or as per any law. For example, for good corporate governance, let's say the company has decided to publish their interim financial statement on their website, and website can be freely accessed by anyone, by the regulators, by the users. Okay, the company was not a listed company. SEBI is not applicable on that company, or any law does not mandate to report the financial statement for those companies on a quarterly basis. But this company has decided to present. And how they are presenting? In Companies Act, it is not required. They are not a listed company. So where they are presenting on their website the complete interim financial statement, the complete interim financial reporting. So now in this case, the company has decided, right? So in this case, when the company has decided, then Ind AS 34 will be applicable on those financial statements. Or the company is required to prepare the interim financial reporting. Why? When the company will be required, for example, listed companies are required to do half yearly, quarterly reporting, etc. So in that case, Ind AS 34 will be applicable, right? Is that clear? Ind AS 34 will be applicable. What is the definition? Now the third part is definition. Interim period means periods less than 1 year, say quarterly, half yearly, 9 months. What is interim financial report? Financial report for a period less than 1 year, which includes, friends, what is interim financial report? Interim to samajh mein aa gaya. Now what is an interim financial report? Interim financial report means a financial report for a period which is less than 1 year and which includes either a complete set of financial statement or a condensed set of financial statement. What is interim financial report? Interim financial report is that report which includes either the complete set of financial statement or the condensed set of financial statement or the condensed set of financial statement. Sir, what is meant by complete set of financial statement? Complete set of financial statement means a financial statement like annual period, right? You must have seen the complete financial statement, which is as per Ind AS 1. So if a company wants to prepare a complete set of financial statement on a quarterly basis for an interim period, it is also allowed, right? It is also allowed. Means the company is preparing the financial statement completely on a quarterly basis, balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts, right? They are preparing complete set of financial statement on an annual basis. Sir, is it allowed? Yes, it is. So complete set of financial statement is prepared as per Ind AS 1. When the entity is preparing complete set of financial statement, it should be as per Ind AS 1. Is that clear? So interim financial report is either a complete set of financial statement or a condensed set of financial statement. Sir, where the format, where the content, or what will be applicable if the company has opted for complete set of financial statement, then it will be as per Ind AS 1. Sir, what is the condensed set of financial statement, friend? If a listed company has to prepare, has to report on a SEBI on a quarterly basis, of course, they have to prepare the interim financial report as well, interim financial statement as well. So every time, 4 times in a year, if they had to prepare the complete set of financial statement, it will be like a cumbersome task. Every time they have to disclose the actuarial valuation. Every time they have to, uh, do all sort of disclosure in the notes to accounts. It will be a very cumbersome task, right? So preparing a financial statement on an annual basis for a big listed company is not an easy task. The financial statement are consisting of 80 pages, 100 pages. The Reliance Industries financial statement is more than 100 pages. I can say that. So friends, that is why for interim financial statement, interim financial reporting, the standard has also given a flexibility that if you want to prepare a condensed, then you can prepare a condensed set of financial statement as well. So condensed set means chota set. Condensed set means minimum requirement. So limited requirement, right? Full set means complete. Condensed set means limited requirement. So if a company has opted to prepare condensed set of financial statement, then of course it will be as per Ind AS 34. Because apart from Ind AS 34, no one is talking about the condensed set of financial statement. Okay, because for interim financial reporting, only Ind AS 34 is applicable. So condensed set of financial statement is given in Ind AS 34. Sir, whether any company, whether any company is preparing the condensed set of financial statement in India, 19 more than 95% companies are preparing condensed set of financial statement. Even Infosys is preparing condensed set of financial statement, right? Okay. What is the content of the condensed set of financial statement? The content of the condensed financial statement is condensed balance sheet. It is not a full balance sheet. It is known as a condensed balance sheet. Condensed statement of P&L, condensed statement of cash flow, condensed statement of changes in equity, and significant oblique limited notes to accounts. See, in all the 4 statement, it is condensed. It is not full set, it is condensed. Condensed balance sheet, condensed P&L, condensed cash flow, condensed statement of changes in equity, and significant oblique limited notes to accounts. So the notes to accounts are also not complete. It's a significant or limited. For preparing the condensed set of financial statement, the component of financial statement requires the presentation of major headings and subheadings of the last annual financial statements. Friends, now standard says that, for example, last time you have prepared the entire balance sheet, and in annual, on an annual basis, the company has to prepare the full set. Okay. So in the condensed set, at least what you are required to do in the condensed set, when you are preparing a condensed balance sheet, condensed P&L, condensed statement of cash flow, condensed statement of changes in equity, at least you have to maintain, you have to publish the major headings and subheadings of the last annual financial statement. For example, in the last annual financial statement, you have printed a balance sheet, you have filed a balance sheet where non-current assets is there, then PP, intangible assets, CWIP, right? Then current asset is there. Standard says that whatever you have presented in the last annual financial statement, at least you have to maintain the major heading and the subheadings. Like the major heading is non-current asset. And what is the subheading? The subheading is PP, intangible assets, CWIP. This is the subheading, right? This is the subheading. So non-current assets, PP, intangible assets, CWIP means the entire balance sheet is required to be given in the condensed balance sheet as well. Sir, then why we are calling it as condensed balance sheet? The major heading and subheading. So entire thing has to be given for balance sheet. entire thing has to be given for P&L. Then why we are calling it as a condensed? Friends, there is a one big difference. You know what is the big difference? When you are preparing a balance sheet, when you are preparing a balance sheet, you are required to provide the note number, right? For every line item. And what is that note number? It is the breakup or disclosure or explanation in the notes to accounts for that item, right? For example, for PP, the entire PP reconciliation is there, gross block, accumulated depreciation, net block. So entire PP reconciliation is there. Am I right? For intangible asset, gross block, accumulated depreciation, impairment, net block. If the company has, taken a loan and placed this PP to the bank, so in that case, this kind of disclosure is also required. So what does it mean? It means the entire disclosure for the line item in the balance sheet has to be given in the notes to accounts, and the note number has to be written on the face of the balance sheet, right? So friends, that notes to accounts for these items is not required in the condensed balance sheet. Are you getting me? Because these notes to accounts are also the integral part of the financial statement. So in condensed balance sheet, no one will be able to know about the detailed breakup or the detailed disclosure of these line items. Is that clear? Is that clear? Have you able to understand the meaning of condensed balance sheet, condensed P&L? Likewise, in condensed P&L, the entire P&L will be there, but the related notes to accounts for every line item will not be there, right? For example, for employee benefit expenses, in notes to account, the breakup is salary and wages. The breakup is apart from salary and wages, the breakup is, let's say, provident and other funds and the staff welfare expenses. Okay, but this kind of breakup is not required in a condensed P&L, in condensed financial statement. Is that clear to all of you, friends? Is that clear to all of you, or it is not clear? Please tell me. Is that clear to all of you? Like condensed cash flow. In condensed cash flow, the major heading and subheadings, right? For example, cash flow from operating activities, investing activities, financing activities, right? And their major subheadings, okay, is also required. Condensed statement of changes in equity. It is also like a same annual statement of changes in equity. Friends, frankly speaking, between the full set of financial statement and the condensed set of financial statement, the major difference is only related to the notes to accounts. The major difference is only related to the notes to accounts, right? In full set of financial statement, there is a complete notes to accounts, but in condensed set of financial statement, the notes to accounts are limited only. Is that clear? Now we have to discuss. Now we have to understand, sir, what are the important notes to account which is given under interim financial statement. Sir, whether the comparative period is required in case of condensed financial statement or in case of interim financial statement, answer is yes. Comparative period is mandatory. Comparative period is mandatory, right? Is that clear? So friends, so far we have understood that if we need to do the interim financial reporting, if we have to prepare the interim financial statement, either it could be a complete set of financial statement or it could be a condensed set of financial statement, right? Is that clear? The components are same: P&L, sorry, balance sheet, P&L, cash flow, statement of change in equity, and notes to accounts. In condensed set, it will become condensed, and the notes to accounts will be limited only. Comparative, it is required. Sir, what are the period for which financial statement is required to be presented? Sir, we know that annual set, for example, annual set is full year. If we are preparing a balance sheet for March 23, FY 22-23, we have to give the comparative balance sheet for 31st March 22. We have to give the comparative P&L for the year ended 31st March 22. We have to give the comparative cash flow for the year ended 31st March 22. We have to give the comparative statement of changes in equity for 31st March 22. We have to give the notes to accounts for, of course, for current year and for the last year, which is as on date, or for the year ended 31st March 22. But sir, what are the periods which interim financial statement is required to be presented? For example, Infosys Limited is preparing its interim financial statement for half year ending September 30, 2021. Please suggest which period needs to be presented in the interim financial statement. This company is required to prepare interim financial statement on a quarterly basis. And now you need to tell me, this company, Infosys, is presenting the interim financial statement on a quarterly basis. Right? What will be the first quarter when they will present this interim financial reporting? Let's say, don't discuss about 30th September. Let's discuss about all the periods, right? Let's discuss about Q1, quarter one. Quarter one means June 30, 2021 in this case. Quarter one means June 30, quarter one means June 30, 2021, right? Is that clear? Quarter one means June 30, 2021. Is that clear? I hope it is clear. पहला क्वार्टर तो 30 जून ही होगा ना. मान लो 21-22 की बात कर रहा हूं तो पहला क्वार्टर तो 30 जून ही होगा ना. So Tushar, even if the financial year for the first time in FY 21-22 the interim financial statement was prepared, if it is for the first time, then comparative will not be there, Tushar. Okay, so how you will get the comparative? The company was not into the existence now. For example, the company was incorporated on 1st April 2021. So for the first quarter, they will prepare the financial statement for the quarter ending 30th June 2021, and they will not have any comparative period, because in comparative period the company was not in existence. So what was the logic for presenting the comparative period? The logic for presenting the comparative period is just to show your performance, right? Have you seen your report card? Have you seen your results in your school? Have you ever seen your result in the school? In the school, normally the examination will be happening on a quarterly basis or on a half yearly basis. Someone called it as a unit test. Someone call it as a quarterly examination. I have seen the result of my daughter. So how the result will come? For example, their unit tests are happening on a quarterly basis. So they have 4 columns: June, September, December, March. March will be the full year. March will be the final exam. So when she will appear in June exam, the result will come and the marks will be allotted in the June column. When she will appear in September exam, the teacher will give the result of September exam, and the teacher will also show the number of June, so that whether the child is improving or the child is going down, so that the performance can be compared. Likewise, in December, September and June will be there. In March, December, September and June will be there. So the point is, what are the objective of comparatives? The objective of the comparative is to compare the performance for the current year vis-a-vis last year, or for the current period vis-a-vis last period. Is that clear? Is that clear? Tushar is asking, no sir, I mean it got listed in FY 21-22 and in previous FY 2021 they were the unlisted. So no such interim financial statement was there available. Tushar, normally you know what happens whenever a company goes for listing, right? They have to prepare the 5-year financial statement for IPO, for initial public offer. For IPO, they need to prepare the 5-year financial statement. So in this case, although the company was into existence, the only thing with the company was not public, but the company was into existence. So in my view, in this case, the listed company has to give the interim, the listed company has to provide the comparative also, right? Yes, now let's discuss the period. That what are the period for interim financial statement? I'm not talking about full set or the condensed set, whatever it will be the set, what will be the periods? So friends, the balance sheet will be as at June 30, 2021. Now tell me what is the comparative balance sheet? Tell me what is the comparative balance sheet? The comparative balance sheet number is always as it, right? So comparative balance sheet will always be the last year annual audited balance sheet. Last year annual balance sheet. What is the last annual balance sheet? March, as at March 31st. What is that? 2021. So balance sheet will always be the last annual balance sheet, right? P&L. P&L will be for the 3 months. Period ended June 30, 20, or I would say for quarter one. So 3 months ended June 30, 2021. Okay. What is the comparative period? Sir, balance sheet you have taken for the March, last annual audited balance sheet. But what about P&L? Friends, balance sheet will always be as it. For example, the company has purchased a land in 1990 for 5 lakh rupees. The land will come in the balance sheet on March 2021. The land will come in the balance sheet of June 2021, September 21, December 21, March 22. So land will come in the balance sheet for every reporting date, right? Right. So it is asset number. But as far as P&L is concerned, it shows the performance. So the performance cannot be compared with the last year. It cannot be compared with the March. So for comparing the performance, the period should be consistent. It will be 3 months. Month ended June 30, 2020. The P&L should be for the same comparative period of the last year, right? A statement of changes in equity is also for the period ended. It also shows the performance. This statement of changes in equity is also, I would say I'll write this here, April 21 to 30th June 21. Right? Here it will be 1st April 20 to 30th June 20. Right? Is that clear? Same way, statement of changes in equity will be also the same comparative period. A statement of cash flow will be also same comparative period, right? Is that clear? Balance sheet, P&L, C, cash flow. So why you have not talked about the notes to accounts? I'll talk separately, right? Is that clear? Yes or no? Friends, yes or no? Now, if the company is preparing the financial statement for half year, which is 6 months ending, which is 6 months ended September 30, 2021. In that case, what will be the comparative? What will be the current period and comparative period? So balance sheet. Let me switch pen here so that you will be able to see this. Just a minute. Yes. Yeah. So for the 6 months, 6 months period, your balance sheet will be which period? Your balance sheet will be as at September 30, 2021. September 30, 2021. Your comparative period will always be the last annual as at 31st March 2021. Last annual period, right? As at 31st March 2021. Is that clear? Your balance sheet will always be the last annual. Okay. Okay. Is that clear? Your P&L. Now your P&L will be for the current quarter as well as year to date. For the current quarter as well as year to date. What is the current quarter? Friends, for the 6 months ending September 2021, what is the current quarter? Current quarter means 3 months. And what is the current quarter? Current quarter starts from 1st July, 1st July 2021 to 30th September 2021, right? As well as the company has to give the P&L for the complete 6 months as well, right? Which is 1st April 2021 to 30th September 2021, right? Is that clear? Because it is 6 months, the company has to give the entire 6 months performance, year to date performance to the stakeholders, as well as current quarter performance to the stakeholders, right? So this is required. Likewise, the company is required to give the comparative as well. The comparative period, 1st July 2020, same comparative period for last year, 22, 30th September 20, then your 1st April 2020 to 30th September 2020. 1st April 2020 to 30th September 2020. Is that clear? So profit and loss is required to present for these periods. Sir, why for 3 months and why for 6 months for P&L? Friends, generally it is a requirement of SEBI, LODR also. That is why in the Companies Act, in the AS or Ind AS, the P&L performance has been given, has been, is required for current quarter as well as year to date, right? Is that clear? The statement of changes in equity. A statement of changes in equity is only required for year to date. It is not required for the current quarter. Cash flow, it is also only required for year to date, means 6 months. Year to date means 6 months. Clear? Or do you have any doubt? Sri Ram is asking, sir, please explain once again about why for comparative balance sheet earlier year same period April to June 20 not considered. Sri Ram, please tell me what balance sheet shows. Balance sheet shows statement of financial position. What P&L shows? It shows financial performance. Position is always as on date. Performance is for the period, right? So Sri Ram, I have given you an example. If a company like Tata Steel has purchased a land in 1960, that land is coming into the balance sheet on 31st March 21 also and in the June 21 also, right? So you tell me whether this 30th March 30th June 2021 and 31st March 21 is comparable or not. It is comparable because I need to compare my financial position. So my financial position will always need to always need to be compared with the last annual audited balance sheet, with the last annual balance sheet, right? So for the balance sheet only, the period needs to be considered as per Ind AS, as per accounting standard, as per IFRS. Only for the balance sheet, the period needs to be considered for the last annual year, last annual closure. Okay, is that clear? Is that clear or not clear? But wherever the performance part is there, like cash flow, statement of changes in equity, statement of P&L, there I have taken the comparative period as per Indian accounting standard. Even in accounting standard, same periods are there. Koshiki is asking, sir, why balance sheet as a June or September is not required? Viraj is saying, sir, does company require to issue every financial year comparative quarterly financial statement constantly, either a complete or condensed? Does company require to issue every financial year? If the company is required to issue interim financial statement, then yes, these doesn't matter it is a complete or condensed. So of course these period needs to be considered, right? Shivani is asking, why is the comparative period for 31st March? Shivani, is that clear? So Namrata is asking, sir, why SOCI or cash flow? Namrata, you are only asking for SOCI. You are not asking for cash flow. Even cash flow is always YTD, right? So as per the Indian accounting standard, or as per IFRS, or as per accounting standard, for the interim period, for the interim financial statement, the SOCI and the cash flow is not required to be given for the current quarter. Why? So the logic was basically, if you will look at this standard is a very small standard, right? And this standard covers or captures only listed companies, honestly speaking. Why? Because as per law, listed companies are only companies who are required to present their results on a quarterly basis for less than a year, right? So these companies are required to prepare the financial statement, and these listed companies are required just because of listing regulations of SEBI. Now SEBI requires, you have seen so many periods, right? Now SEBI requires that P&L should be current quarter, last quarter, as well as year to date. So in P&L, SEBI requires the P&L for every quarter as well. But the SEBI does not require the statement of changes in equity. SEBI require cash flow, but does not require cash flow for a quarter as well. So these requirements in Ind AS or AS for interim financial reporting is somehow in line with the requirement which is there with the regulator. Is that clear? That is why, Namrata, SOCI and cash flow is always for year to date, means for September it is 6 months. Okay. Sriram is asking, sir, it means for balance sheet alone, last year, guys, let me tell you, last year, saying last year is not a correct word. It is 31st March. It is as on 31st March of last year, right? That is why balance sheet, when you read balance sheet, it is always start with balance sheet as it. It is not for the period ended. It is as it, right? Your balance sheet number will always as it, right? If I talk about your balance sheet number, these numbers are always as it. These numbers are as it. But all these numbers, sorry, this is not as it. Your balance sheet number is always as it. But if I talk about all these numbers are for the period ended. P&L, SOCI, cash flow, right? So as per standard, P&L is required for current quarter as well as year to date, but cash flow and SOCI is only required for the year to date, and balance sheet is always compared with the last date of the last year balance sheet, right? Now let's come to the 9 months. 9 months ended. 9 months. The company is presenting on a quarterly basis. December 31st, 2021. Is that clear, friends, or it is not clear? Is that clear or not clear? Is that clear now? Yeah. Okay. Now for 9 months, your balance sheet will be for the current period as it December 31st, 2021, right? And the last one will be, the last year ended will be March 31st, 2021, right? Your P&L will be for the current quarter, P&L, right? Your P&L will be for the current quarter P&L, which is 3 months. And current quarter means quarter starting from 1st October 2021 to 31st December 2021. What is the comparative quarter? 1st October 2020 to 31st December 2020, right? Then year to date, okay? Your P&L will be for current quarter and year to date, means 9 months ending. So 9 months means 1st April 2021 to 31st December 2021. Comparative will be 1st April 2020 to 31st December 2020. To 31st December 2020, right? Your statement of changes in equity will always be YTD. 1st April 21 to 31st December 21. Comparative 1st April 20 to 31st December 20. Cash flow will always be YTD. 1st April 21 to 31st December 21. 1st April 20 to 31st December 20. I hope it is clear to all of you guys. I have shown you the interim period for 3 months, 6 months, 9 months as well, right? These are the period which is required to be presented in the interim financial reports. Interim financial statement doesn't matter it is a full set of financial statement or doesn't matter it is a condensed set of financial statement. Namrata, is it clear? Viraz, Shivani, Namrata, Radhika. Radhika is saying, thank you, sir, for explaining every period. So, my pleasure, Radhika. Yeah. Friends, is that clear? Okay. Now, friends, let's discuss what is required to be given in the notes to accounts. Notes to accounts. What is required to be given in the notes to accounts? Friends, in the notes to accounts, what is required to be given? First of all, I will bifurcate this notes to accounts into two parts. Notes to accounts into two parts. Two kind of notes are required to be given. Two kinds of notes are required to be given. In the notes to accounts, two kind of notes are required to be given. One, significant notes. Second, mandatory notes. Significant notes and mandatory notes. What is meant by significant notes? Some item which is given in the standard. So in the standard, a list is given. So if these items are significant, means amount is material, then only disclosure is required. In the standard, some mandatory items are given, which means even though item is not material, but still the disclosure is required. Is that clear? So we will be discussing the significant event and transaction first in the notes to account. In the interim financial statement, what notes to accounts required to be given, right? Sriram is asking, sir, still need a clarification. For the purpose of this standard, can we prepare balance sheet for the comparative period for the same period? Sriram, no. Again, I am telling you, balance sheet will not be for the period. Balance sheet will always as it. Sriram, if you will see the annual balance sheet now, it will not be for the period. It is as at. Balance sheet as at 31st March 23, balance sheet as at 31st March 21. बैलेंस शीट हमेशा रात को 12 बजे बनती है. रिपोर्टिंग पीरियड जो होता है, रिपोर्टिंग पीरियड के एंड के रात के 12 बजे बैलेंस शीट होती है. लेकिन P&L, कैश फ्लो, सोसी ये पूरे पीरियड का होता है. इज दैट क्लियर? Is that clear, Sri Ram? You have to mandatorily provide the balance sheet figures for 31st March only as a comparative. Is that clear? Okay. Now let's discuss what are the significant notes which are required to be given. Notes relating to any significant events and transactions are required to be disclosed in interim financial statement. Following disclosure are required to be made if material. Following disclosures. What disclosures are there? Write down inventory to NRV, net realizable value, reversal of impairment of inventory. Friends, this is as per Ind AS 2. When you read Ind AS to inventory standard, you will find that even this was in AS2 also, right? If the inventory value is getting down to NRV, right? Or in the last year, you have booked an impairment loss on inventory. Now you are reversing the impairment loss on inventory. If there is a booking of impairment loss on inventory or reversal of impairment loss on inventory, it is required to be disclosed if the amount is significant, right? For example, the balance sheet size is 200 crores and the impairment is just 5 lakh rupees. Or let's say the inventory size is 20 crores and impairment is just 10 lakh rupees or 5 lakh rupees. So it is not material. In that case, it is not required to be given. Is that clear? Impairment of financial asset as well as non-financial asset. If the company has recorded impairment on property, plant and equipment, intangible asset, or the company has impaired trade receivables, loans, right? This is as per Ind AS 36 and Ind AS 109. Okay, Ind AS 109. So if there is any impairment which is recorded on financial asset or non-financial asset, if this impairment is material, then it has to be disclosed in the notes to accounts. Reversal of any provision for restructuring. Friend, if the company has done any restructuring and the company has recorded the provision in the last year or in the last period, now in the current period, the company is reversing the provision for restructuring, then it is also required to be disclosed if the amount is material. I'm only talking about the items which are required to be disclosed, right? You will read all these things. If you will ask, sir, what is meant by provision for restructuring, when the provision for restructuring will be made, how it has to be made, you will read this in Ind AS 37, right? Acquisition and disposal of PPE, property, plant and equipment. Okay, acquisition and disclosure of PPE. What is that? That is your addition and deletion of PPE. As per Ind AS 16, property, plant and equipment. Friends, addition and deletion of PPE is required, right? Normally, what companies do, they give this entire PP schedule, gross block, ECDAP, net block in their interim financial statement as well. Because normally this PP addition deletion may be material for some companies, right? Like all these infrastructure companies, all these telecom infra companies, these are presenting the disclosure of addition and deletion in capex, addition and deletion in PP. They are giving the entire PP schedule, like annual schedule, right? Capital commitment, contingent liability, these are also required to be disclosed in the interim financial statement, like your annual financial statement. Litigation settlement. There was a litigation which was going on. The company has done the settlement and the company has paid some compensation. So that is also required to be disclosed. Contingent liability and contingent asset, it is also required to be disclosed, right? If the amount is material. Correction of prior period error. If there is a prior period error, then of course correction needs to be required, and all the disclosure of prior period errors are required as per Ind AS 1 and Ind AS 8. I hope you guys have already covered Ind AS 8. Who has taken your Ind AS 8? Yeah, I hope you guys have covered Ind AS 8 and Ind AS 1. Ind AS 1 I have covered. Ind AS 8 who has covered? Changes in the business or economic environment which has impact on the fair value of the financial asset or financial liability, right? As per Ind AS 109 or Ind AS 113, right? If there is a change in the fair value of financial asset or financial liability, it is also required to be disclosed. Any default in the loan covenant. You remember, I have told you one carve out relating to the long-term loans, right? So if there is any default which is made by the company in any loan arrangement, loan agreements, in any terms and condition of the loan, so it is also required to be disclosed. Related party disclosure as per Ind AS 24. Related party disclosure, the entire related party disclosure, your name of the related party, your relationship with the related parties, transaction with the related parties, outstanding balances with the related parties, these are required to be disclosed in the notes to accounts. Changes in the classification of financial assets and financial liability. So many of you who are attending the classes of financial reporting for the first time, you may not be aware about financial asset and financial liability. Friends, you will read this in detail in the financial instrument standard, which is as per Ind AS 109. So if there is a change in the classification of any financial asset or financial liability, that change in classification related disclosure is also required to be given in the notes to accounts. Which notes to accounts? Interim financial statement notes to accounts if the amount is material, right? Transfers between the input hierarchy in the financial asset or financial liability. Friends, you will read in Ind AS 113, right? Ind AS 113 is a standard which talks about fair value measurement. It talks about when a company is presenting any assets or liabilities on a fair value, any financial assets or financial liability on a fair value, the company has to use some inputs. The company has to use some data to identify the fair value of the financial asset or financial liability, right? So this data is known as an input hierarchy. There are three levels of input hierarchy. So if it is in input level 1, or if it is moving from level 1 to level 2, right, then disclosures are required to be made as per Ind AS 113. So standard says that, Ind AS 34 says that if there is any change between the input hierarchy in calculating the fair value of the financial asset or financial liability, so this is required to be disclosed, right? Friends, this is a disclosure or reporting based standard. Just you need to think about that this specific list is given in the standard. If this item is significant or material, then it is required to be disclosed only, right? If it is not significant or material, it is not required to be disclosed. What is given? Like impairment of inventory, reversal of impairment of inventory, impairment of financial asset as well as non-financial asset, reversal of any provision for structuring, acquisition and disposal of fixed assets, capital commitment, litigation settlement, contingent liability, contingent asset, correction of prior period error, change in the business or economic environment which has an impact on the fair value of financial asset or liability, any default in the loan covenants, related party disclosure, change in the classification of financial assets and liabilities, transfer between the input hierarchy in the financial assets or liabilities, right? Now let's come to the mandatory disclosure. Even though if it is not material, it is required to be disclosed, right? Now we are talking about the mandatory disclosure. Is that clear? We are talking about mandatory disclosure. Any doubt? This is just a list, specific list, exhaustive list which is given. Yeah. Coming to the other disclosure. First we talked about the disclosure if significant or material. Now we are talking about other disclosure. Doesn't matter significant or material. Disclosure number 1. Statement that the same accounting policy or method of computation is followed in the interim financial statement as in the last annual financial statement. Sir, what does it mean? Friends, in annual financial statement, you have to give the entire set of significant accounting policies and judgment and estimates, right? But in interim financial statement, that policy, judgment, and estimate is not required. If you will see, the significant accounting policy, judgment, and estimate part of any big listed companies, you will find that the 15 pages or 20 pages only belongs to the significant policy, judgment, and estimates. Am I right? So 15 से 20 पेज की तो policy होती है. So this policy is not going to repeat in every interim financial statement. You have to write only one statement in the notes to accounts that the same accounting policy or method of computation is followed in the interim financial statement as followed in the last annual financial statement. Sir, why reference is required to be given for the last annual financial statement? Because the last annual financial statement is available with the public. If it is a listed company, generally this requirement is for the listed company, right? So the listed company has already published annual report, which is there with the SEBI, which is there on their website as well, Okay. on their website as well. Okay. So friends, only a single line statement is required to be given. That's all. You are not required to rewrite 20 pages of the policy. But sir, what happens if the different policy and method has been followed in comparison with the last annual financial statement? Then in the last annual financial statement, we have applied FIFO method of inventory valuation. Now I want to apply this weighted average method, or a new standard came. For example, sir, the lead standard, right? So the lead standard was applicable from 1st April 2019, the new lease standard. And this new lease standard had changed the entire accounting and reporting of the leases in the balance sheet. Sir, in that case, what happens? I cannot say that my accounting policy of this quarter is same with the last annual accounting policy. So friends, in that case, standard says that if different accounting policy or different method of computation is followed in the interim period in comparison with the last year period, last annual period, then the nature and impact needs to be disclosed. So for second, you need to disclose the impact, nature, and you need to disclose this fact as well, right? You can say that except leases, the company has followed the same accounting policy or method of computation, whatever has been followed in the last annual audited financial statement. For leases, due to introduction of new standard, we have changed this policy, and this is the new policy. This is the nature of the change, and this is the impact of the change. Is that right? समझ में आ गया? सिंपल है. आपको सिंपल लिखना है कि सेम पॉलिसी हमने यूज की है जो हमने लास्ट एनुअल में करी थी. अगर कोई पॉलिसी चेंज की है तो बताना है कि ये नई पॉलिसी है, ये इसका नेचर है, ये इसका इम्पैक्ट है. दैट्स ऑल. सारी पॉलिसी दोबारा नहीं देनी. Is that clear? Point number B. Explain the seasonality or cyclical nature of operations in the interim financial statement. Ram is asking, if once an entity opt to prepare interim financial statement in Ind AS 34, does it mean that it has to mandatorily apply the same on all period, or is there any provision for deviation from the standard? So Sriram, if a company has decided to prepare interim financial statement, for example, a private limited company, just due to the good corporate governance, they wants to publish their financial statement on their website. Since it is not a listed company, as per law, it is not required. So the company is presenting its interim financial statement for 1 year. I mean to say every quarter for a particular year. If the company has decided to prepare, it has to apply Ind AS 34, right? There is no deviation. But since it is not mandatory, if in the next year the company wants to stop publishing the quarterly financial statement, it can do so, right? It is not like once the company has opted, it will publish in every quarter. If it is required by law, of course, yes. If it is not required by law, it is on the mercy of the company. Is that clear? But if the company is decided, if the company is preparing and presenting, in that case, it has to apply Ind AS 34, right? Point number B, explain the seasonality or cyclical nature of operation in the interim financial statement. For example, woolen industry. If I talk about woolen industry, their quarter one, quarter two, I mean to say June and September revenue, right? Their business operations is comparatively much lower than quarter three and quarter four, which is December and March, right? Why? Because this woolen industry is a cyclical nature of industry. Sugar industry is a seasonal or cyclical nature of industry. So if a company belongs to a seasonal or cyclical nature of operations, in that case, the management is required to explain the seasonality or cyclical nature of operations in the interim financial statement, as right. So they have to write that this company, the operation of the company is cyclical or seasonal in nature, like we are dealing in woolen industry, and our operation will be much more in the quarter 3 and quarter 4 in comparison to quarter 1 and quarter 2. Exceptional item. And we have discussed the exceptional item in our Ind AS 1 class. If there is any exceptional item, in that case, that exceptional item is required to be disclosed irrespective of the significance or materiality. Nature and change in estimate last interim period or last annual period. If there is any change in accounting estimate, for example, in the last annual period, till the last annual period, the property, plant and equipment, let's say building, it was depreciated over the useful life of 20 years. Now, in the current quarter, the company has decided to reduce the useful life of the fixed asset, useful life of the building due to some indicators, right? So this change in useful life is a change in estimate. So if the company has changed any estimate, the company has changed any policy in comparison to the last annual period, it is required to be disclosed separately. Issue, purchase, or repayment of equity and debt securities means capital structure. If there is any issue of equity shares, any issue of debt instrument, debentures, any purchase of debentures, any repayment of buyback of shares, bonus shares, debt securities, so anything, any movement relating to capital structure, equity and debt, it is also required to be disclosed. Dividend paid or declared. If the company has declared or paid any dividend during the interim period, it is a mandatory disclosure. Segment information is a mandatory disclosure. That is why the company which is having segment, for example, you can go and download the Reliance Industries quarterly results. You will find they are presenting their segment information. Subsequent events occurring after reporting date, which is as per Ind AS 10. Subsequent events are required to be disclosed in the interim financial report, right? Business combination. If the company has acquired any business, if the company has acquired any company, or the company has divested, the company has lose control on its subsidiary, or the company has shut down its operations, this kind of, acquisition of business, shutting down of business operations, or losing control on subsidiary, this is required to be disclosed in the notes to accounts, interim notes to accounts. Fair value disclosure of financial instruments, your investment, your mutual funds, your commercial paper, your government securities, if there is derivative contracts, hedging contracts. So the fair value disclosure of these financial instruments is also required to be made in the notes to accounts. If an entity becomes an investment entity or it ceases to be investment entity, friends, you will read this concept of investment entity in Ind AS 110, right? Or Ind AS 112. If a normal company becomes an investment entity, or an investment entity becomes a normal company, so this is required to be disclosed. Disaggregation of revenue from contract with the customer, right? What is a disaggregation of revenue from contract with the customer? Your line items of revenue, your operation line, right? For example, revenue from sale of goods, revenue from sale of services, other operating revenue. So this is also required to be disclosed. Friends, in the upper part, we have discussed the disclosure, it is material. For example, contingent liability. For example, addition and disposal of fixed assets, impairment, reversal of impairment, related party disclosures. But here in our disclosure, we talked about the disclosures which is mandatory, like your statement that same accounting policy has been followed in comparison to the last annual financial statement, or if there is a change in policy, you have to write down the new policy and the nature and impact needs to be disclosed. If the business is seasonal or cyclical, the fact is required to be disclosed. Exceptional item, nature and change in estimate, your change in capital structure, dividend paid, dividend declared, operating segment information, subsequent event, acquisition of business and losing control over business, fair value disclosure, investment entity to normal entity, normal entity to investment entity, disaggregation of revenue from contract with the customer, and disclosure of compliance with Ind AS in interim financial report. This disclosure of compliance with Ind AS and interim financial report is also required to be disclosed, right? And what is that? You remember? Explicit and unreserved statement of compliance. Like in annual financial statement, in every interim financial statement, the explicit and unreserved statement of compliance is required to be disclosed. The statement of compliance. You remember I've shown you the statement of compliance in Adani Enterprises Limited annual report. So that statement of compliance is required to be disclosed. I hope it is clear to all of you. Yes, Vivek, the divestment is also needs to be disclosed. Losing control, acquiring control, both. Friends, is that clear or it is not clear? Let me know if on any part it is clear or not clear. Guys, have you understand? The balance sheet, P&L, cash flow, notes to account, cash flow and statement of changes in equity. These are pretty similar in full set as well as condensed set. In the condensed set, the only thing is the note is not there. The entire note referencing is not there. Why it is not there? Because entire note is not required. As you have seen that entire note is not required. There are two kind of notes to accounts which is required. One significant, one mandatory. Right? We have talked about significant as well as mandatory. Since we have talked about interim period, we have talked about interim financial report, which could be of two types: complete set of financial statement, condensed set of financial statement. Then we talked about the period, including comparative period. Then we talked about in the notes to accounts, what is going to be disclosed, significant information, other information. Friends, now we are talking about principles of measurement and recognition in interim financial report, right? Point number A, materiality. Now, let's say Viraj is an auditor of a company, and the company is a listed company which is preparing interim financial results. The total turnover of the company is 500 crores. The annual, so the annual turnover of the company is 500 crores. Let's say the annual profit is 50 crores, and the quarterly turnover is, let's say, 125 crores, and the quarterly profit is 12 crores or 12.5 crores. The quarterly profit is. Now the question is, we are talking about materiality, whether the item is material or item is not material, whether the item is material or item is not material. Now the point is, let's say there is an expense of 2 crores or let's say 1 crore. So for identifying the materiality of a particular quarter, particular interim period expense, let's say it is 1 crore. Okay. So whether we need to compare with the annual turnover, annual profit is 50 crore, right? So 1 crore, what is the percentage of 1 crore out of 50 crore? It is 2%, right? But if I'll compare with the quarterly profit, my current period profit is, let's say, 10 crore. So what is the percentage of 1 crore out of 10 crore? It is 10%. Now the question arises for identifying the materiality, whether current period number needs to be considered, or I mean to say whether interim period number needs to be considered, or materiality has to be checked from the full year, from the full set of the numbers, from the full set of financial statement, from the annual period financial statement. What is your view? What is your view? Guys, as you are preparing the interim financial statement, for checking the materiality should be checked only always from the interim period. So materiality needs to be checked. Let me write here. Materiality needs to be identified from the interim period numbers, not from the annual period, right? An item could be immaterial from the annual period perspective, from the 12 months number perspective, but from the quarter perspective, it could be material, right? From the quarter perspective, it could be material. There could be a loss in a particular quarter, but there could be a profit in the particular quarter. You have to see the materiality from that perspective. Is that clear? Is that clear? Viraj is asking, sir, if any employee salary is on hold for some reason, does company require to disclose in interim finance if employee is highest paid employee? Doesn't require. So Viraj, this kind of disclosure is not required. Your employee benefit standard does not talks about this disclosure. Right? If litigation is going on with some key managerial person, in that case, that litigation may be disclosed. Friends, we are talking about the principle of measurement and recognition in interim financial report. The second point, same accounting policies as annual, except there is a change after annual financial statement. So it says that your basis of recognition, accounting, reporting will be same in every interim financial period, what we have taken in the annual financial statement. But if there is a change after annual financial statement, you can carry that change. For example, till March 19 annual financial statement, Ind AS 17 was applicable leases, right? But with effect from 1st April 19, Ind AS 116 was applicable. So companies have given lease accounting policy as per Ind AS 17 in annual accounts of March 19, but for interim period for June 19, they have applied Ind AS 116, right? Is that clear? Because the standard has been changed. Revenue, recognition of revenue. Sorry, recognition of revenue. If the revenue is seasonal, cyclical, or occasional, right? Because for woolen industry, let's say in the first 2 quarters, the revenue is very less, but in the last 2 quarters, the revenue is very high. So whether the revenue has to be streamlined in every quarter, the revenue has to be straight line in every quarter, or the revenue has to be recognized in the period in which it occurs. So standard says that if a company is a seasonal, cyclical, or occasional, the revenue has to be recognized in the same interim period in which it occurs. For example, for the woolen industry, in the first quarter, the revenue is 10 crore only. In the second quarter, the revenue is 10 crore. In the third quarter, the revenue is 100 crores. In the fourth quarter, the revenue is 125 crores. It is not like that entire revenue has to be consolidated, estimated revenue, and then it has to be bifurcated into 4, and then the same revenue has to be recognized. No. Whatever revenue has been occurred in whatever interim period, that revenue has to be recognized in that interim period. So probably in quarter 1 and quarter 2 there could be a losses, but in quarter 3 and quarter 4 there could be high profits, right? It is not straight line. It has to be recognized in the same quarter in which it occurs. Is that clear? Viraj, is that clear? Friends, are you enjoying the session? It's a small standard, and let me tell you, we will be able to finish the standard by 9:10. Yeah. Any doubt so far? Okay, let's move on. We talked about mentality. We talked about the accounting policy. We talked about the revenue recognition. Now let's talk about the impairment in the interim financial statement. Very, very, very important. And for example, in quarter 1, the company has a goodwill of 100 crores. In quarter 2, this goodwill has been impaired. The goodwill is impaired in quarter 2 due to the losses incurred in the subsidiary. But in quarter 3, it got picked up and subsidiary got huge orders in quarter 3. And there was a goodwill on 30th June 2022, let's say. On 30th September 22, the goodwill got impaired. Why? Because there are huge losses in the subsidiary. But in quarter 3, the subsidiary got huge orders, and now the subsidiary will earn windfall profit. Now the question arises that there was a goodwill in the first quarter which got impaired in the second quarter, whether it can be reversed in the third quarter. Whether it can be reversed in the third quarter? Answer is no. Why? When you read Ind AS 36, it says that even though if the goodwill which has been impaired in any interim period, goodwill cannot be reversed in the subsequent interim period, because it will tantamount to a self-generation goodwill, and self-generated goodwill is not allowed. Is that clear? Is that clear? So friends, please remember the goodwill. If a goodwill has been impaired in any interim period of the same financial year, this goodwill impairment will not be reversed in the subsequent interim period, right? Impairment recognized in an interim period will not be reversed in the subsequent interim period even of the same year. You will not say that sir एक ही साल का तो बीच का interim period है, जून में गुडविल थी, सितंबर में इंपेयर हो गई, क्या मैं उसको दिसंबर में रीस्टेट कर दूं? आंसर इज नो. Ind AS 36 prohibits that. What about the item other than goodwill? Let's say fixed asset or intangible asset other than goodwill. Example, at the end of the quarter one, it was 100 crores. So 20 crore impairment has been charged in quarter two, right? 20 crore impairment has been charged. So the closing balance becomes 80 crores in quarter two. But in Q3, the value of PP got increased beyond the earlier carrying value. In quarter three, the value of the PP has been substantially increased. The value of the land has been increased. So in that case, in quarter three, the impairment which is recognized in quarter two needs to be reversed, and this PPE has to be remeasured. PPE has to be revised at its original carrying value. Is that clear? Is that clear? Why? Because Ind AS 36 allows that. For item other than goodwill, impairment recognized in one period will be reversed in another interim period if situation is favorable, right? So for goodwill, impairment recognized in one period is not allowed to be reversed in another period, but for other than goodwill, impairment recognized in one period is allowed to be reversed in another period if the situation becomes favorable, if the favorable indicator is there, right? We have talked about impairment as well, right? Any doubt here? Really glad to see the response and interaction of the students for this small standard. Since last 1 hour and 40 minutes, there is more than 100 responses. And most important part from the examination perspective as well. Most important part, friends. What is that? Most important part. Income tax. Sir, how this income tax is required to be measured, how this income tax is required to be recognized, right? How this income tax is required to be calculated. Let's say income tax rate is 25%, okay? But now how this income tax is going to be measured? Now the question is how it is going to be measured, okay? So friend, the standard says that the income tax has to be recognized or measured. The interim period income tax for the interim period is recognized or measured on the basis of best estimate. On the basis of best estimate of weighted average annual income tax rate for full year. Please remember, please write down. Income tax for the interim period is recognized oblique measured on the basis of best estimate of weighted average annual income tax rate for full year. मतलब हमें पूरे साल का वेटेड एवरेज एनुअल इनकम टैक्स रेट निकालना है और मुझे करंट पीरियड के प्रॉफिट बिफोर टैक्स पे अप्लाई करना है और अकॉर्डिंगली मुझे क्या करना है, उसका इनकम टैक्स कैलकुलेट करना है. So let me explain you with the help of this example illustration in the institute study material, right? You will be able to understand the measurement and recognition of income taxes with the help of this example. Company A has reported rupees 60,000 pre-tax profit before tax in the first quarter and expect a loss of rupees 15,000 each in the subsequent quarter. So friends, in the first quarter, the company is saying in the first quarter, the company has earned a profit of 60,000 rupees. And in the subsequent quarter, Q2, Q3, Q4, the company is expecting. So the company is preparing the financial for the current quarter, June. And the company is expecting a loss in the next 3 quarters, 15, 15, 15. So what is the profit for the full year? What is the profit for the full year? The profit for the full year is 15,000. Expected profit. It has a corporate tax slab of 20% on the first 20,000 of annual earnings and 40% on all additional earnings. And the company is covered into the slab rate. What is the slab? For the first 20,000 profit, the company has to pay a tax of 20%. For the next 40%, other than for the amount exceeding 20,000, the company has to pay a tax of 40%, right? So friend, first quarter, the company has earned 60,000 rupees. What would be the tax if I go by this slab? What will be the tax in the first quarter? The first 20,000, 20% equal to 20,000 multiplied by 20%. What is the remaining? What is the amount exceeding 20,000? It is 40,000. 40,000 multiplied by 40%. My total expense is 20,000 for the first quarter. We're going by the 20%. And what is the ask of the question? Calculate the amount of tax to be shown in each quarter. Now the question arises, sir, you have said that in interim period, income tax has to be measured or recognized on the basis of best estimate, okay, of the weighted average annual income tax rate. Weighted average annual income tax rate. Weighted average annual income tax rate. Right? Now, what is the weighted average annual income tax rate? How to calculate that? Friends, what is my expected income tax full year? Please tell me. What is my expected income tax full year? Going by the tax slab, please tell me what is my expected income tax for full year? First 20,000, 20% is the slab rate. So here we are expecting only 15,000. So 15,000 multiplied by 20%. It is 3,000. So what is my weighted average rate of income tax? What is my weighted average income tax rate full year? What is my weighted average income tax rate full year? What is my weighted average income tax rate for full year? 3,000 divided by 15,000. What is that? That is 20%. That is 20%, no? 3,000 divided by 15,000, 20% means if I talk about my total weighted average rate, it is coming out at 20%, right? It is coming out at 20%. And have you understood how I have calculated 3,000? I have calculated 3,000 because the tax slab is 20% on the first 20,000, right? Is that clear? Now we have to calculate the amount of tax in each quarter. What is my amount of tax? My amount of tax in each quarter is as follows, right? Now I need to apply this weighted average rate. I need to apply this weighted average rate, right? This is as follows. So this is my income. This is my average tax rate. Average tax rate for the year. Average tax rate for the year. This is my quarter. This is my period, right? And this is my tax. Q1, Q2, Q3, and Q4. Okay. What is my income? What is my income in Q1? It is 60,000. What is my expected income in Q2, Q3, Q4? 15,000 loss. 15,000 loss. 15,000 loss. Okay. This is my amounts. The total is, of course, total is becomes 15,000. What is my average tax rate? My average tax rate is 20%. What is my tax? 60,000 multiplied by 20%. In the first quarter, there will be a tax expense. In the second quarter, there will be tax income. Third quarter tax income. Fourth quarter tax income. The total tax for the full year will be 3,000. Right. So this is how the tax has to be calculated on the basis of weighted average tax rate. I hope it is clear to all of you. I hope it is clear to all of you, friends. Is it clear to all of you? Sir, what happens in quarter two? For example, when we reach quarter two, instead of 15,000 loss, it will be 10,000 profit. In that case, you have to revise your calculation. For example, when you reach, when we reach at quarter two, when we reach at quarter two, instead of, let's say, my expectation has been changed. For example, my expectation has been changed, right? So the actual for the quarter one was 60,000. It got completed. In quarter two, I have earned 10,000 rupees of income. Instead of losses, I have an income. But in Q3, Q4, I am expecting a loss of, let's say, 15,000. I am expecting a loss in Q3 and 10,000 loss I am expecting in quarter four. What is my total income? My total income becomes 45,000, right? Now, what is my tax rate? What is my weighted average tax rate for the full year? Expected income tax for the full year. My expected income tax rate for the full year is first 20,000, 20%, and the remaining, which is 45 minus 20, 25,000, 40%. My total tax expense should be 14,000. What is my total annual weighted average rate? My weighted average rate is 14,000 divided by 45,000. It is 31%. It is how much? 31%. Friends, in that case, in quarter two, what I'll do? In quarter two, what I'll do? Again, I will compute this again in quarter two. How I will compute? Since I'm giving you second scenario also, right? Let's call it as a scenario two. Scenario two, when the actual number change in Q2 and expectation has also changed, right? So I am giving you scenario two also, right? That you will be able to understand completely. Okay. This is my weighted average annual income tax rate. Right? Okay. Now what will happen? What is the income in Q1? In Q1, the income was 60,000. In Q2, it is 10,000. In Q3 and Q4, it was 15,000 and 10,000 of losses. What is the total? The total is 45,000. Now, friends, what could be the, as per this, what could be my tax rate in quarter one, quarter two, quarter three, 31%? What is my tax expense? In quarter one, it should have been 18,067. In Q2, it is 3,111. In Q3, Q4, it is this one. Friends, now already 6 months have been passed. What is my total expense which I am supposed to record it? I am supposed to book. It is 21778. What is my total tax rate? Total tax expense. My total tax 30th September is 21778. How much I have already recorded? Already recognized. How much already recognized? How much is already recognized? How much is already recognized, friends? Tell me how much is already recognized. How much is already recognized, guys? Radhika is saying, sir, already. How much is already recognized? So she is saying, sir, already 12,000 has been recognized. What is recognized? 12,000. This one, quarter one, 12,000 has been recognized. So balance recognized be recognized in Q2. In Q2. In Q2, you have to recognize the balance, which is 21,778 minus 12,000. Means in Q2, instead of 111, you have to recognize 9778. Is that clear? Cumulative catch-up impact has to be taken in Q2. I hope with this scenario number 2, which is the second scenario which I have made it myself. It is not in the institute illustration. I hope now you have cleared about the concept of recognition of taxes. First, you need to compute the average. You need to compute the total income for the full year, which includes your current period actual income plus expected income for the future period. Then you need to compute what is the tax for the full year. Then you need to compute the weighted average rate, which is expected tax divided by the expected income. And now you have to apply that weighted average rate to the quarterly or interim period profits, and then you can calculate the tax, right? So this is how this computation is happening. Is that clear or it is not clear? Namrata, is it clear? I have given two scenarios, one from the institute study material, one from my own. Friends, is that clear? Not clear? It's a very important part. Viraj, Shivani. So Radhika is saying absolutely clear, sir. What about others? Namrata is also clear. Guys, what about you? What about all of you? Other than these 2-3 students who have responded, Rohan has also responded. Viraj, Nidhi has also responded. Thank you. Friends, now let's discuss one more important illustration from the Institute study material, illustration number 5, right? As far as concept is concerned, we have completed all the concepts. Illustration number 5. ABC Limited manufacture automobile parts. ABC Limited has shown a net profit of rupees 20 lakhs, right, for the third quarter of 2001. So what is the net profit? The net profit is 20 lakhs for the third quarter 2001. Following adjustments are made by computing the net profit. They have made the following adjustment, right? They have made the following adjustments. Bad debt of rupees 1 lakh incurred during the quarters. 50% of the bad debt have been deferred to the next quarter. Friends, in the interim period, in the first quarter, so whatever profit, third quarter. In the third quarter, there was a bad debt. One of the debtor, one of the customer has become bankrupt, and there was a bad debt, and the company has only recognized 50%. I mean to say 50,000 bad debt in quarter 3, and the company has deferred 50,000 of loss in the next quarter. Is that right? Answer is no. The losses and expenses has to be recognized immediately when it happened or when it incurred. So that is not right. Okay. Additional depreciation of 4,50,000 resulting from change in method of depreciation. So the company has changed in estimate, the company has changed the method of depreciation, and due to method of depreciation, the company has taken an additional hit of 4,50,000. So that is right, because change in accounting estimate has to be applied prospectively, right? So that is right. So in the current period, there is a change and the company has taken that change. Exceptional loss of rupees 28,000 incurred during the third quarter. Exceptional loss of rupees 28,000 incurred during the third quarter. There was an exceptional loss. And company has also deferred 50% of the exceptional loss in the next quarter. So the company has also deferred the 50% of the exceptional loss. Is that right? Answer is no. The entire exceptional loss has to be adjusted, has to be charged off to the current period only. So it means the company has 50,000 rupees of expenses the company has deferred, which should be debited in the current period itself. Additional depreciation is okay. This 14,000 rupees of exceptional losses the company has to debit in the current period itself, right? 14 the company has debited. The next company has, it has to be debited in the current period only. rupees 50,000 expenditure on account of 5 lakh expenditure on account of administrative expenses pertaining to the third quarter is deferred on the argument. So there was a administrative expenses of the 5 lakh rupees in the third quarter, but it also deferred that the fourth quarter. And what was the argument? The fourth quarter will have more sales. In the fourth quarter, the revenue will be much higher, and that is why the fourth quarter should be higher expenditure. It should be debited by higher expenditure. The expenditure are uniform throughout all the quarters. The other expenditure are uniform throughout all the quarters. बट कंपनी ने जो 5 लाख का खर्चा किया क्वार्टर 3 में, कंपनी कहती है उसको फोर्थ क्वार्टर में लेके जाएंगे. क्यों? क्योंकि फोर्थ क्वार्टर में ज्यादा रेवेन्यू होगा, तो इसलिए एक्सपेंस भी ज्यादा होना चाहिए. Is that contention right? As certain the correct net profit to be shown in the interim financial report of the third quarter to be presented to the board of directors. Now you have to compute the right correct net profit to be shown to the board of directors for the third quarter. Right. Now in this case, what is the net profit which is given in the question? Net profit per the question. What is the net profit given in the question? What is the net profit given in the question? The net profit of 20 lakh rupees is given in the question. 1, 2, 3, 4, 5. Right. Now we need to do some adjustment. What is the first adjustment? Bad debt. The company has deferred the bad debt by 50,000 rupees in the next quarter. 50,000 needs to be deducted. Second adjustment, additional depreciation. Nothing. For bad debt, of course, adjustment is required. Adjustment is required. Additional depreciation, no adjustment is required. Right. Third one, exceptional loss. Again, for exception loss, adjustment is required. Yes, it is required. Right. What is that? 14,000. Admin expenses, whether exception is required? Yes, it is required. Why? Because this is incurred in the current quarter itself. Minus 5 lakh. Right. What is my total? What is my total? Total adjustment? My total adjustment is equal to sum of these three adjustments. What is my correct net profit? Correct net profit for Q3, it is 14,36,000 is my correct net profit. My correct net profit will be 14,36,000. Right. This will be my correct net profit. 14,36,000. Is that clear? Any doubt? Is that clear, friend? Friends, since morning we have discussed about interim financial reporting. We have discussed what is meant by interim period, what is meant by financial reporting. Interim period means a period which is less than 1 year. Then, friends, we have discussed that this standard is applicable to those entities who have decided or are required to prepare interim financial statement as per the any other law, right? Then we have discussed, friends, that interim financial statement, interim financial report could be of two types: complete set of financial statement like annual set, or condensed set of financial statement, right? The component is balance sheet, P&L, cash, changes in equity. In your complete set, the complete notes to account will be there. But if you are opting for a condensed set, the notes to account set will be limited. First, there are some significant event and transactions are given, or some mandatory disclosures are given, right? Then, since we have talked about the period, we have talked about the period of interim financial statement, right? Then we have discussed what will be the period in the first quarter, second quarter, third quarter. Balance sheet will always be aged, which is for the last year end. Otherwise, P&L, SOC, cash flow, it is for the comparative period. P&L is for the current quarter as well as year to date, but C and cash flow will always be year to date, right? Then we have discussed the principle of measurement and recognition, where we have discussed the materiality should be always for the interim period only. Then we have discussed the same accounting policy. Revenue has to be recognized for the period in which it is incurred. impairment in interim financial statement we have discussed. Then we have discussed the income tax calculation, and we have covered two practical questions from the institute study material. And I have also elaborated illustration number 1, scenario 2, so that you will be able to understand if subsequently the income is changing, how this has to be taken care of as far as tax is concerned. Right? I hope you have enjoyed the session, you have understood the session. Please let me know if you have any query. I'll wait for another 1 or 2 minutes, then I'll conclude the session. Right? Nidhi is saying crystal clear, share. Crystal clear, sir. Friends, whether today's session is clear to all of you, I have not given you break today because I know that this is a small standard, and let's finish this in one shot. I will share this Excel file today with Board of Studies, and you can just listen this YouTube video once again and go through with the Excel file, and everything will be remembered to you by heart. Thank you, Nidhi. Thanks for your wonderful feedback. Thanks, guys. Bye bye. Take care. Stay safe. Stay happy.